Hi guys, welcome to Money Control. Joining me today in conversation is the chairman of Landmark Group, Mr. Sanjay Thakker. Your IPO has opened. Talk to us about the initial response that you've seen from anchor investors.
Yeah, so the initial response from anchor has been extremely good. We have been able to get the marquee mutual funds, HDFC Mutual Fund, Nippon Mutual Fund. We have got Birla Mutual Fund,
Right.
and international names like Goldman Sachs, PineBridge. So those are the names which give me hope that we are on the right track. We have long-term investors who will play out the Indian growth story. The aspirations of Indians is what we are banking on.
So tell me something. Initially you were planning to sell stake worth 60 crore rupees, the promoter family, and now you've reduced that to 10 crores. What propelled that?
So what happened is that while I was doing the road shows and I was trying to convince people, I got convinced myself so much that I shouldn't be selling. I mean, and at the valuation finally that we are coming in at, it doesn't make sense for us. I can live without that money, and we'll play out for some more years.
But talk to us about what makes your business model different from the existing partnerships. Of course, they're all in the unlisted space, and you will be the one of a kind business model of an automobile dealership to list on the Indian exchanges. So talk to us about the big triggers that you guys are betting on.
Yeah, so right now what happens is that generally in India, the auto dealerships are owned by a family and run by a family. Landmark has been designed since 1998 to be different. So the ownership and the management has been separated a long time back. Also, the property ownership, which is a fetish with a lot of Indian families, that's not what we do. So out of the 112 outlets that we have currently, only 2 are owned. Everything else is on a long-term lease, and we try to make each and every store profitable, paying the market rent. So these are the two things that set us apart. We are well capitalized. TPG, who came in on our cap table in 2014, is a meaningful shareholder. Deloitte is our auditor for last 8-9 years.
Right.
So this is something corporate governance. So we are designed to be a slightly larger organization, and we will become one.
So from here on, what are the plans for expansion, and are you also looking to bring more brands on board?
Yeah, so we have been, we, as you know, are the largest partner for practically all that we have partnered with. So we go deep. Our relationships run deep with people. We are not spray and pray kind of group. We don't. We go deep in a geography. We go deep in an OE. So we are choosy about who we partner with. And but yes, BYD is the most recent one. We'll have hopefully a meaningful partnership with them going ahead. And yes, I mean, I can't say which ones, but I'm sure life will take us to different places.
So since you're talking about your partners, now one aspect which some of your critics have to say is that yes, you have some big brands on board, the likes of Mercedes, there's Honda, there is Jeep as well, but these are brands which are not very big on volumes, at least as of now in India. The volumes are very less compared to the likes of a Maruti or a Tata or a Mahindra even. So what is your plan there to expand volumes?
Yeah, so one needs to understand that the volume of vehicle and the value of vehicle are generally two different things. So the average selling price of some of the small brands, small car brands that you mentioned, is maybe 1/5 or 1/6 or even sometimes 1/15 of what we are selling. So it's the value in our business which counts rather than the volume. The second thing which is important to note,
but it is sorry to butt in, but it is of course a volume game, especially in the auto space.
In our case, not so. I'll tell you why. Because we get a commission on the value. So if I were to sell a 1 crore rupee car, is equivalent to selling maybe 30 cars of 3 lakh rupees.
Right. Okay.
So that's what I'm saying. And the competition at the lower end, it's a commoditized product. We are into giving experiences to people, and the correlation between a brand selling large numbers and the dealer making money is not as strong as you think it is. So there is lot of inter-dealer competition in the smaller car brands. What we have been able to do over a period of time is that we have created local level exclusivities.
Okay.
So painstakingly, we have, with the help of the OEs who really love us with the way we operate, we have created in the same town, we are the only dealers for that brand.
Okay.
So that helps us.
So how many markets do you have like that?
So out of 59, I think when we filed the document, out of 59, we had 53 where we did not have any local
You had
level
exclusive
partners for that brand in that town.
Okay.
Now that is something which helps. One needs to, in retail, look at what is the local level competition, what is the per store sale and profitability.
Right.
And that's what matters.
So profitability is something that you guys have been able to achieve quite impressively. Is it because of operational efficiencies and operating leverage kicking in? Can you sustain that
Sure.
going forward?
So it's a very interesting and important question to answer. What has happened is that in the last 6-7 years, we have set up capacity for higher volumes. And the volumes, for reasons we know, last 2-3 years of COVID and some economic turbulences that we have seen, didn't happen. So for once we are seeing tailwinds and the capacities are getting filled up. We still are operating in our workshops, which is an annuity type of a business. Every vehicle that we sell,
This is your after sales
sales business. So we sell 6-7 years, we get income from that vehicle.
Right.
And for premium and luxury cars, there is very little competition from local garages, really non-existent if you ask me. So this is a very solid, predictable annuity type of a business that we are talking about. So once the tailwinds are there, the sales will make money, we will make money in insurance and finance. We have a lot of small tickets which add up to our profitability. So I'm pretty confident.
So how much does these non-sale components contribute right now, after sales and insurance, etc.?
So last year is what we can talk about right now. So 50% of our profits approximately came from the sales vertical, which is the sales commission, the finance commission, the insurance commission.
Okay.
And 50% of our profits came from after sales, accident repair, servicing of vehicles.
That's quite a lot,
that is a very stable and a predictable and a growing kind of a business. And you can extrapolate it. I'll be in a position to tell you that in the month of December of 2023, how many cars am I likely to service, and what is going to be my revenue and profits
So
from
you have
that.
some visibility.
As soon as I know how many cars are on road, I have visibility.
Yeah. Okay. So as far as retail investors are concerned, QIBs are concerned, those who will be now looking at subscribing or not subscribing to the IPO, what do you think is the biggest value proposition that's on offer? Any message to them?
Yeah, so the thing is that the journey of India is just beginning. What we are seeing is that the aspiration levels of people is increasing. Mercedes-Benz happens to be in news, and that's something I can immediately, the figures come to mind. This year is going to be the largest, best ever year for that brand. 16,000 vehicles possibly is what the company will end up selling in India. Compare this to around 7.5 lakh Mercedes-Benz would be sold in China around the same time in a normal non-COVID year. 70,000 in Korea.
Yeah.
Now Indians will buy significantly larger number of this brand, and when I say this brand, it will percolate down to every other premium and luxury brand. This is just to demonstrate the potential that we are sitting on. The after sales business is an extremely predictable and cash generating business. We are an asset light company, so this has a long way to go. I mean, you asked me about why I did not sell in the IPO. I am answering this question also along with it.
But there are no risks or threats that you are factoring in right now?
There are macro risks which are there, like COVID happening again, or some war happening. I mean, those one cannot take away. Save and accept that if you believe in India, we are there.
But in terms of supply, in terms of wait list, etc., how are things now?
So the situation is still with say Mercedes-Benz, we have a 5-6 month of waiting for, but at the back of the best ever supplies, we have the best ever waiting. Now that isn't it a great situation to be in? The supplies, I'm sure, will improve because nobody saw this kind of a demand surge coming.
All right, Mr. Thakker, all the very best for the IPO, and thank you for joining us on Moneycontrol.
Thanks a lot.